Thank you very much. First, I will just show you the CFO slide, as I call it. And here we go. I will just give a quick run through what risk intelligence is. So risk intelligence in a nutshell. So what we do is that we do security risk assessments and planning, offering support and to our clients 24 hours, 7 days per week, 365 every year. The threats that we cover when we talk about security is organized crime, terrorism, piracy, insurgency, war and military conflicts. For instance, the war in Ukraine. It's theft and subsistence crime. So you can say that it's a range that goes from a very low level of violence or no violence at all up to full-scale war. What we've been doing since 2008 is to deliver an average of 20% in growth based on our maritime business. We are adding potential growth based on increased maritime sales, both to existing clients and to new clients. We are also developing maritime partner sales and our land-based business. What is our business model? The business model is based on the risk intelligence system as our core, which is a cloud-based solution that has a license-based recurring revenue with 12 months paid up front, which gives a good cash flow. Interestingly, we had a net retention rate of 115% in 2021, and that includes a churn in top. So hadn't we had a churn, which is unrealistic, we would have had about 118%. This means that we are selling more to our existing clients every year. The product is fully scalable, I'll get back to that. On top of that, we have other recurring revenue from our intelligence reports that are produced in PDF. They are delivered weekly, monthly, or quarterly, and they are also fully scalable. Then finally, we have our advisory services, which is our consulting arm with bespoke or semi-bespoke products to support our clients' processes. They are semi-scalable and some are less scalable. What is the long-term strategy? That is to become a Bloomberg of risk intelligence with a turnover of about 100 to 400 million within a 5 to 10 year period. We do deliver intelligence as a service, so it's analyzed data. We're not delivering data as such, and we are not a software company, but we're using an SaaS model. So that's important to make that distinguish. We are actually delivering content and not software. We also have a long-term strategy of increasing the recurring revenue to plus 90% of the total revenue and to reach at least 30% EBITDA. So how do we work? We work with the intelligence cycle where we collect information, turn it into intelligence through this process. We verify the data that we get in or the information that we get in. We can get it from open sources, we get it from closed sources, we get it from our clients that operate more than 8,000 ships around the world and have offices around the world as well. We verify that, then we analyze it, then we do an assessment on the information received, and then we distribute it on our cloud-based platform. Then we receive feedback from our clients and others, and then we may change the direction, and then that's how the intelligence cycle works. So what is the secret sauce of risk intelligence? Everyone can build a cloud-based platform and deliver products in this area. What they cannot do is to develop a source network that you have down in the left-hand corner. You have to spend a lot of time building up databases and experience and relationships, which is very important in our line of business. So what I'm usually saying is that you can have maybe an Indian company producing your platform in 30 days in Mumbai, but it will take years to develop the source network and the analytical models and so on. So that's our kind of secret sauce, our Coca-Cola recipe, so to speak. What is the timeline? I founded the company in 2001 when it was a very small company, and even so we got introduced to the maritime market in 2004, and we launched MaRisk, so the first web-based platform, the first web-based product in 2008, and PortRisk in 2015. These two constitute our main maritime product today. Then we had the IPO in 2018 and started developing the company, both with developing land risk, but also developing in terms of the organization for sales. We also set up an office in Singapore and started a data and AI process. We signed the first client for land risk in 2020, which was Sony. We have a strategy, as you can see at the bottom, that is expiring now, and we are launching a new strategy for 2025 after the summer. If we go back to the products, we have the web-based products, cloud-based products, MaRisk, PortRisk, and LandRisk, where MaRisk and PortRisk constitute the maritime product in total and is normally delivered as one. The maritime market is based on the number of selection of modules. Maybe it's MaRisk and or PortRisk, and it's between 84,000 to 392,000 Danish kroner. And it's also based on the number of operated vessels for the ship owners. We also have many clients that do not operate vessels, like insurance companies and government clients and so on. Then they can add on selection of add-on layers. They can add a number of users, or they can have it introduced to the whole fleet, like some of our clients have already. Some may even choose API integration into their corporate systems, and special licenses are up to 1.5 million. For the sales team and the marketing and lead generation team, it's basically transaction sales. They sell a license, and one salesperson can do the process. These are just some of the examples of the clients. Between you have oil majors and shipping companies in different parts of the world, including 2 Swedish ones at the bottom. We also have government clients, and here you see 2 of them together. It's the US Navy and the Danish Navy operating, I think, in the Indian Ocean. So if we go to the last product, the last module, land risk, then it is characterized by major global companies that often do not have intelligence systems in place. They also have much more complex organizations and demands than our shipping clients or the maritime clients. This means that we need to have a comprehensive approach, including involving several different departments inside risk intelligence, which means that it's more like solution sales, even if it's based on a module. And we had estimated a 6 to 12 months lead time for these products. The industry segments for this is third-party logistics, so basically the logistics providers that have the full chain inside the company, and then logistics and trucking, which is so-called 2PL, manufacturing companies, that could be industrial companies and so on, global brand owners, that could be companies like Sony, trading houses and platforms, government and NGOs. The reality was that when COVID started, many of the initial discussions came to a halt. Sony signed up, however, in 2020, and we continued during 2021. Then when we basically ended COVID, and people who had been dealing with supply chain problems, and many of the people that we deal with in these companies are also the ones that are involved in the supply chain problems, and they are obviously more important to deal with than buying a new software or whatever you would call a product. And then came the war in Ukraine, which certainly didn't help in that respect. So while we think that it's a promising market, it's one where we need to have patience. If we then look to some of the key financials, then you will see in the top line the growth figures from the time when we started initiating the growth process and spent time on that and the IPO in 2018. Then we had substantial growth of 28% in 2019. Then we had a drop to 7% in 2020 mainly because of COVID. And then we came back to 23% in 2021. If we look at the revenue, then it has increased steadily from 2018 to 2021. You will also see that our revenue is not distributed equally over every quarter, and this has to do with our licensing model and our revenue model, where you pay up 12 months ahead, so it's not distributed across the 12 months. That's important to understand because it means that in Q4, where we have the renewals for 1st of January, so the calendar year, those companies that follow that is much higher than, for instance, Q2. If we look at the revenue ratio, if you remember, then I mentioned that our long-term goal was to get above 90% for the recurring revenue. And here we have 3 different types of revenue, the ones that I mentioned before, which is the system in dark blue, and then the other recurring revenue, the intelligence reports, and then the light blue is the advisory services. And as you can see, it went from 88% in 20 to 85% in 21. This is not so much a question about the recurring revenue dropping, but actually that advisory services came back online. The consulting increased quite a lot in 21. So it's more a relative distribution between the two than actual numbers. If we look at the total ARR, then you can also see that from Q1 18 to Q1 22, we've had a steady growth over every quarter, almost every quarter. The metrics, if we look at the SaaS metrics, then we increased with 15% in ARR during 21 compared to 25 in 20. In the system revenue, so the ones from the cloud-based solution, we had the same increase, 15 respectively 25. An important indicator is the ARPU. The ARPU says something about how much is the average sale per unit, and in this case the unit is a license, which increased from 128 to 138, so 10,000 more in average. The NRR, as already mentioned, is also a key indicator because it tells us how much we actually sell more to the existing clients, even when we deduct the churn from the clients that terminate. And of course we have clients that terminate every year, but we also get new ones in. And so this is the 115% that is important to notice. If we then look at the almost the bottom line, if we look at the EBITDA and then the net result, then you can see there is a kind of development from 18 to 19, which was all the investments that we started in after the IPO, and then we have a steady trend line going upwards towards 21, with a decrease in EBITDA and a significant decrease in net result, negative net result as well. You will also see, if you remember the net, the revenue per quarter from before, that's also why we have different revenue or EBITDA and net results in the quarter, and you will see that Q4 in 20 and 21 was positive. If we look at the growth potential, then we are building on this baseline, which is the historic 20% growth in the maritime, plus additional growth via upsell to existing as well as new clients. We are also developing strongly the market with partners, where we integrate our data into their products via an API integration. We are also working continuously to increase our data collection and using some machine learning to further improve our collection, which also means that we can actually increase scalability on our production. As mentioned, the new 25 strategy will be published end summer 2022. If we then look at the outlook and the forecast, then obviously there are a number of challenges, but also opportunities in the market, in the global supply chain and so on, that affects the war in Ukraine and so on. But our guidance is that we will have a growth between 15 and 25%. We'll have a revenue between 21.5 and 23.5 million. We'll have a negative EBITDA, a negative net result, but a positive cash flow. If we then look at EBITDA beyond 22, then if we continue as we are, and we look at these two growth scenarios, one is 15% growth in 22, 23, and 24, and the other one is 20%, then you will see that we will have positive EBITDA for the year. by 23 and onwards. Obviously, these are examples only and can be obviously changed by any strategy changes. Not that that is likely, but it's just to show that the current strategy and the current business model that we have will actually turn into positive EBITDA. Thank you.
Thank you very much. ARR, NRR, and ARPU, and churn rate, these are all important key figures for you. We left Q1, or we left an entirely different Q1 than the one we entered. How has these key figures changed during the quarter?
Yeah, ARR increased by 20% and NRR 105%. We had a slightly higher churn, 3.8, which is not alarming. Of course, we've been used to 0 to 2, so for us it's almost doubling, but compared to many other businesses, it's not alarming at all. The important thing is that the NRR is 100% or above, because that means that we're selling the same to the same clients. That is consisting of both price increases, but also that they actually buy more. If we then go to the ARPU, which increased to 139,000, so increased with 1,000 kroner. Of course, not significantly, but it increased as well.
And as for the war in Ukraine, how has that affected you?
It has affected us in a number of ways. One is that the major logistics companies, they are dealing with that, and we cannot really continue discussions on land risk acquisition, at least for some time. But positively, we've had a lot of business regarding the war because we have assisted our clients with a number of issues. We also helped both clients and non-clients free of charge by helping them evacuate their crews that were caught on ships in Ukrainian ports when the war started on 24th of February.
We'll leave the quarter behind and talk a little bit more about the organization itself. If we dig a little bit deeper into the services you provide, in the analysis performed on your share by Carlsquare, they lift the land risk logistics service that you launched together with Sony. Tell us more about the service. In terms of practical intelligence that you offer, how does it compare to your maritime business?
Yeah, I mean, first of all, the maritime business is characterized by low probability and high impact. So this means that when a ship gets attacked, it may have a serious consequence for the crew, for the company, for the cargo owner, and so on. While on the land side, it is high probability and low impact. So it's cargo theft, but it happens thousands of times in Europe over the year. While on the maritime side, we may have 300 or 400 incidents that are major incidents on a yearly basis globally. So you can see that there's a totally different scale. This also means that the intention is also kind of different because it's something happening every day. While if you had hijackings or kidnappings or violent attacks, you would have a lot of different attention span.
What of the potential of this service? How would you describe it?
Potential for the client or for us?
No, for you.
For us, yeah. I mean, the potential is really big. The potential market is about 4 billion kroner. Not that we can cover all of that. While on the maritime side, it's probably between 600 and 700 million. So when we actually, I mean, we do not foresee that we'll have more COVID and there will be more Ukraine wars on that scale. So when things start to calm down and we have been, then we can, I think we can profit on our patients and our investors' patients on land logistics, and then we will have more sales when it comes to that.
Mar risk in maritime, we have port risk in ports, and now we have also land. If we are to look forward into expanding potentially your product portfolio, are there any other areas that you'd want to offer risk intelligence in?
No. Not currently. What we are going to do is that we are going to increase and deliver more kind of, we could say, services and more add-ons to the maritime business, which means that you can select more output from third parties and then we'll generate revenue from that as well. So you can say that because maritime is our core business and that's what delivered the 20% growth over the years, that's what we are focusing on now. and then we will get back to land risk. Not get back to, of course, we will still try to sell land risk, but at the moment that's what we're focusing on.
And if we are to talk a little bit about a break-even point, not when, but how? What will need to be done to reach that break-even point?
Yeah, I mean, in terms of EBITDA, we are talking about just continuing as is, because that's what we showed in the two graphs, that it's 15 or 20% growth, then we will hit a positive EBITDA. Then the net result will obviously depend on depreciation and financial costs and similar. So that depends on, it will be 23 or 24. It really depends on the result in 23 from on the EBITDA. If we look at our costs, then our costs are quite stable, you can say, because our production is as is. So it's more in sales and marketing and lead generation where we've been investing resources, and we'll continue to do so. So we're not going to expect any high rises in our cost base. And then obviously, if the growth increases with, let's say, 20%, then it speaks for itself. Then at some point, then we'll get into plus. And at some point, we'll also get into a substantial plus.
So far, we have no questions from our live chat, but I'll turn to the audience.
Mm-hmm.
Yes?
All right, thank you for taking my question. I was thinking about the ARPU for the maritime solution. You have increased that quite substantially during the past years. Is there any potential further upside to the ARPU for the maritime solution?
Let me repeat the question.
Yeah.
Is there any potential upside for the ARPU in the maritime services?
Yes, there is. One is that selling more layers or users to the existing clients, and that's what we are doing at the moment. One of them is also to sell more vessel users, which means that the solution gets out to the ships, on board the ships. And that's also something that is happening. So that's one side. That will increase the ARPU. But also when we start selling third-party data to our clients, that will increase the ARPU as well.
Are there any other questions? Very well. Hans-Tino Hansen, I will thank you very much for your time.
Thank you very much.